Ladies and gentlemen, good day and welcome to the Orient Limited Q3 and 9M FY26 earnings conference call. As a reminder, all participants' lines will be in listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference call to Mr. Surya Samant from Steeler IR Advisor. Thank you. And over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us today. We have with us today the senior management of Orient Limited, Mr. Aditya Gupta, Chief Executive Officer, and Mr. Anuj Arora, Chief Financial Officer, who will represent Orient Limited on the call. The management will be sharing the key operating and financial highlights for the quarter and 9 months ended 31st December 2025, followed by a question and answer session. Please note, this call may contain some of the forward-looking statements which are completely based upon the company's beliefs, opinions, and expectations as of today. These statements are not a guarantee of the company's future performance and involve unforeseen risks and uncertainties. The company also undertakes no obligation to update any forward-looking statements to reflect developments that occur after the statement is made. I now hand over the conference to Mr. Aditya Gupta, sir. Thank you, and over to you, sir.
Thank you. Good evening, ladies and gentlemen, and welcome to our Q3 FY26 earnings call. Through Q3, we have continued to focus on demand generation for dealers, product premiumization, brand awareness, and digitizing our process. This has helped us to consolidate our momentum. Early-stage products like cement and steel did well in Q2 and are expected to perform strongly in Q3 also. This is good news for us as it increases the project pipeline for tiling. Another green shoot has been industry exports. Data till November 25 suggests that for 8 months FY26, exports are estimated to grow by 8% over last year. This should help by diverting capacities from domestic to international markets. We expect a positive waterfall effect for the tile industry from these developments and are optimistic that our initiatives on product and market working will help drive growth for OBL in calendar year 2026. More so, as not much new capacity will be added through 2026. We at OBL are seeing positive traction in engagement with consumers, especially digital tools usage, B2B buyers and dealers. The company's focus on demand generation has started resonating with our business partners who are finding it easier and more convenient to do business with us. On the revenue front, Q3 top line has increased by 3.4% over last year. For the 9-month period, these figures are 474 crores, up 1.1% from last year. 61% of our sales today comes from vitrified segment, which is higher than what it was previously, while GVT alone contributes 44% of our sales during Q3. Branding activities and TV ads continue. We have been on TV consistently for the last 3 quarters with Hindi, Kannada, Bengali, Marathi and Hindi channels. This is helping drive brand awareness. Overall, we see momentum building up for the industry and are confident of participating in this. With this, I would like to hand over to our CFO, Mr. Anuj Arora, to take this quarterly update forward. Thank you.
Thank you, Aditya. Industry growth has remained muted over the past few quarters. In this environment, the company adopted a deliberate and disciplined strategy focused on premiumization of products, strengthening core operations, optimizing cost, improving profitability, and preparing the platform for the next phase of growth. We are now seeing clear signs that these initiatives are delivering results. A sharp focus on operational efficiency has led to a 4.5% reduction in the manufacturing cost on a like-for-like basis after normalizing for product mix and energy prices. Gross margins continue to rank among the strongest in the industry, consistently sustaining levels between mid to high 30s. While some of those savings were passed on to the customer, but a part was retained to ensure continued margin expansion, ensuring profitable and resilient growth. On a consolidated basis, Q3 FY26 EBITDA increased by a robust 35% year-on-year to 10.8 crores. Profit before tax rose to 4.7 crores compared to 1.4 crores in Q3 FY25. For the 9 months ended FY26, EBITDA stood at 26.1 crores, marking a 25% increase year-on-year basis. PBT improved significantly to 8 crores from 0.2 crores in the corresponding period last year, highlighting the strength and sustainability of the company's earning recovery. From the balance sheet perspective, the company continues to demonstrate strong financial discipline. The working capital cycle remains healthy at 31 days, in line with December 24 levels. Importantly, the company is now virtually debt-free on a net basis with a net debt of just 0.1 crores. This reflects a strong liquidity position, robust cash flow, and effective working capital management, providing significant financial flexibility to support future growth and value creation. With this, I would request moderator to open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Resham Mehta from Green Edge Wealth. Please go ahead.
Yes, good afternoon. Thank you. Just wanted your, thoughts and opinion on, the export market. So you did call out that, we are anticipating a 8% growth in the export market. However, if we see, China has been setting up its factories in Gulf and, Africa, which has been eating into our Indian exports. So, just wanted your comments there.
So, the current data that from different analysts, different sources that I see is, yes, there is a recovery as compared to 25, though not at the 24 levels. Also, one more change which is anticipated from 1st of April is that there were some export benefits which Chinese government used to pass on to the exporters. Likely, some of those incentives effective 1st of April will not be there. So this should further help the Indian domestic market compete better with the Chinese player. So hopefully, still that complete clarity is not there. But if this works out, then probably this will be a further boost for Indian exports.
And what do you think, will it take for, demand to kind of come back in the domestic Indian market? So one is, of course, if exports pick up, then, it is beneficial for players like us. Second, how is, the construction activity, etc.? How do you all see that picking up and, demand coming from there?
Okay, so I think the domestic market, the first indication is how cement and steel have been performing. Now this quarter 2 was good, quarter 3 is also expected to be good. And these are the initial stages of construction, which basically implies that down the line, when the finishing stage comes, there will be a robust demand for tiles. So that is another factor which we feel will help drive momentum. and interest rates are down. They are flat for housing and all. So I think that should also spur. Excuse me. That should also spur demand. We have mentioned in the past that dealers have been downstocking for some time. I think that trend is now coming to an end because dealer level stock levels are down quite a lot from, say, the last 1 to 2 years. And I think this should also stop being a factor for the industry going forward.
So do you see there is some gap between primary and secondary growth?
See, unfortunately for Reshma, we do not get, reliable secondary sales figures at an industry level. It is a very primary-led industry, and dealers are usually not comfortable sharing any data on secondary sales. So I think, but as I said earlier, I think they are now at par because there was a time when dealers were overstocked. I think over the last 1.5 to 2 years, they have brought down their stocks to a level that they are comfortable with. So going forward, I think primary and secondary should be in tandem.
And just a last follow-up. So, you said cement and steel demand, are lead indicators. So typically, what is the time lag, that we see, for tile demand to come back in line with cement and steel?
I think it would take, say 3-4 quarters for it to start playing up. So I think middle of this calendar year, and it will progressively keep improving quarter on quarter, but I think the full impact should start coming in the second half of this calendar year.
All right. Thank you so much.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Asthav from Orient Capital Market. Please go ahead.
Thank you for the opportunity and congratulations to the management for a good set of numbers. My first question is, do we see these margins to be sustainable in the next few quarters?
Definitely yes, Arthav. I think you already spoken about the focus on cost management and how our gross margins have been behaving. So as operating leverage improves, we expect to actually do better than what we have done in quarter 3.
So we see this. We see margins to be better in Q4 than Q3?
So generally, Q4 is better as compared to volumes. So automatically, operational leverage will come into play, and it will be better than Q3. Though we don't give future guidance, but historically, it has been the case. Q4 has always been better. So yes, if gas prices are stable, it will be better than Q3.
Okay. Coming to gas prices, there's been news lately of 30% hikes in the U.S. Does this affect us directly or indirectly in any way?
No. So gas prices are pretty much stable. I think on a weighted average basis, compared to the last quarter, gas prices are up by 50 paisa only. So I don't know about this 30%. So there is no way there is a 30% increase.
Okay, sir. And on this top line, is this volume-led or ASP-led for the most part?
So it is all volume-led. So from the last quarter onwards, the growth has been volume-led only. Quarter 1 in terms of volume was flat. Quarter 2 continued the volume momentum, and Quarter 3 is further up.
Okay, got it, sir. And just to ask on utilizations, could you help us quantify what our utilizations were this quarter?
So current utilizations are similar to the last quarter. It's in the 65% odd range only.
Okay. And sir, we did, this is my last question, we did have a pilot project on tile adhesives. So any progress on the same?
So it's continuing. I think initial response has been good for us. We are still in selected markets of North India, not yet gone national, which will happen next financial year. So positive movement, but a slow build-up. We are not like rushing into multiple markets at the same time.
Okay, so have we started selling tile adhesives already on a commercial basis, or is it still on the pilot phase?
No, we are selling now. It's moved beyond the pilot phase. We are selling it commercially.
Okay, good. Okay, thank you. I'll get back to the queue.
Thank you. Participants who wish to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Rohit from Samatva Investments. Please go ahead.
Hello, sir. Thank you for the opportunity. So my first question is on your Orient OBTBs. So if I look in FY22, we had around 285 OBTBs, if I'm not wrong. And 3 years, it's been 3 years, but we are still, just about 300. So I just wanted to know why has the growth not been that great for our OBTBs, because that was where we wanted to grow the fastest. So just your takeaways and what's been your learnings about the tile boutiques in the past 2 to 3 years, and where do you see it going in the next 2 to 3 years?
So OBTBs continue to be extremely central to our strategy. Even today, more than 40% of our sales is coming in from OBTBs. Actually 42% odd. Now your query about number of OBTBs 3 years back and now. So we have made a very conscious shift to start chasing quality versus quantity. Over the last 3 years, we have closed down a large number of OBTBs where we were not happy with the kind of display work or the customer service which they were giving. So you don't see the net number. So gross adds have been there in the last 3 years, but the net adds have not been that spectacular. Another thing which we have been doing is that for the last 1.5 years, we have been working more on our existing OBTBs, making them larger and totally upgrading and renovating them. So that is something which we will continue for the next 1 or 2 years. That existing OBTBs will be made bigger and will be renovated to better, showcase the product that we have today, rather than going all out for new OBTBs.
Got it. Fair enough. So my second question would be, the volume growth that we have seen this quarter, geographically, from where has it come? Has it been from our core markets, or has it been more from, the new markets like South and West?
So the core markets of North and East have continued to do well. We are doing very nicely in Western India also. Actually, that is leading in growth. And South also has, some geographies have started picking up for us nicely. Some states have started picking up nicely, but within South, there are some states which are not doing well, and there are some states which are doing very well. So overall, South is growing, but muted.
Hello.
Does it answer your question? So among the new markets, West is doing well. North and East continue to do well. West is doing very well for us this year, and South, certain states have started doing well for us.
Got it. So I had just one question. So historically, in the past 1 or 2 years, our focus has shifted towards the retail part of it, but we have historically been also very strong on the projects part of it. So going forward, are we going to be more retail focused, or are we also looking at to grow the project segment? Because if I'm not wrong, now retail is now around 80%, and this was comparatively lower a few years back. So will the focus be more towards the retail, or are we looking at also the projects where we have historically been very strong?
So it's not either or kind of a situation. I think it is relative. So we are focusing more on retail. That's right, and that is where you see a lot of these premium products that we are launching. A lot of these digital tools that we are launching are basically aimed towards the retail consumer. So that continues. We feel that is kind of more sustainable, more profitable. So that focus will continue. While at the same time, you're right, in last about 12 odd months, we have had some challenges on our large institutional businesses, large project businesses. Our new teams are now stabilizing, and we expect to pick up the slack which has come into these businesses from now onwards. We started seeing some early signs of revival there, but looking to do much better there. And these are totally, different segments. There are different teams with different kind of pricing and different kinds of product that they push. So going forward, we like both, but compared to previous years, definitely we are giving a very, very big push on the retail.
Got it, sir. So just one last question was, so since the EU FTA has been approved, just wanted to know an Indian tile that is that's sold to the European Union. With the FTA, what will be the impact on the prices? So by how much will it reduce? Any broad figure on that?
I don't know. We do know that with the UK FTA, which was signed, sometime back, there have been some queries have started coming in. The EU FTA, I have not gone through the details, but by the time the due diligence happens, legal scrubbing happens, and it goes through the EU Parliament and member states. My sense is that it will be effective on ground from 2027, not before that. And let's see, but the details of the treaty are not yet out, so I have no clue of how it will impact the export duties.
Fair enough, sir. So thank you so much for the detailed answers. All the very best. Thank you.
Thank you.
Thank you. The next question is from the line of Ashwant from Samadba. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Just wanted to, I understand that the industry has been through quite a tough time in the last few years. And given that our sales have kind of stagnated for almost 4 years now, so what is the time frame that you guys see where you can probably get like a revenue of 1,000 crores?
Could you please repeat your question? Not very clear.
I'm saying, so given that the industry has been through a tough time in the recent past, so what is the time frame in which you see our company hitting revenues of close to 1,000 crores?
So I think you're asking me to forecast the future. As a policy, we don't give out futuristic guidelines. I did talk about, though, that the green shoots that we are seeing in the market. I spoke about how early stage construction products are doing very nicely. I spoke about how more projects are being launched, and they will get into the finishing stage over the next few quarters. And also I talked about exports started to grow at an industry level. So I think some of the headwinds that the industry has been facing for the last 2-3 years will definitely slow down, and this combined with our internal initiatives on demand generation, on product side, and on digitization will definitely help us grow much faster than what we have been doing in the past.
There's a point taken, but just trying to understand. See, you may have like a vision or like some vision or some targets which you have, right? I mean, what you plan to reach, or maybe if it's not revenues, at least the volume growth numbers. So I understand revenues might not be in your hands always, but what about the volumes? What you're looking at in terms of the volume growth the next 3-4 years?
So, we stay away as a policy from any future guidance, so I'll not give you any specifics. But I think overall the industry seems to be coming out of a stage of a time period of a slow growth, and this thing. Another thing which I spoke about briefly is that we don't see any major capacity addition mostly in 2026. There are hardly another 8-10 plants which we know of, which will come into play through 2026. So capacity will remain similar or same as what it has been in the last 1 or 2 years, and some green shoots on exports, green shoots on early stage construction products. So I think the industry is now well set for better growth than in the past.
Got it. So in that case, in the next 2 years, where do you see yourself spending your cash flows? Say, is it on opening more boutiques will fetch you the best returns, or is it the marketing? Or again, I'm sure it's all of these, but I'm saying if you would prioritize, what are the top 2-3 focus areas where you'll be spending money in the next 2 years?
So I think great. We will definitely be spending to add distribution, whether it is through OBTBs and or other distribution expansion activities. That is one area. Second area is marketing. Historically, we started our TV advertisement from about 2 years back and all. We are extremely late at it. And now, from this financial year, we are moving to a stage where we are investing and spending every month on TV. I think, but not across India. We don't have, for example, we don't have anything in Tamil Nadu. We don't have anything in Andhra Pradesh, Telangana, and all. So we are going to spend much more aggressively on TV in FY27, and of course spend on adding up distribution and displays.
Okay, got it.
We have. I'll just mention another thing that might help you. Anuj had talked about capacity utilization. So we did go through over the last 4 years a big capacity expansion, multiple capacity expansion projects. As a company, we now have almost 43 million square meters capacity, along with an associate company. So we do not see any major capacity enhancing investment. We have enough spare capacity to kind of fill up for the next 2-3 years. So focus is going to be on the market, on market building, distribution, brand awareness, and all.
Sure. And what has been your experience in the southern markets with your Hoskote facility and all? Has that met your expectations as to what you had when you started? How is it tracking now? And I'm just trying to understand, does it make more, so I'm trying to understand the importance of a pan-India presence versus going stronger in your core markets, because given that you already have strong competitors in the south, so I'm just trying to understand, one, your own assessment of what happened in Hoskote so far and the southern markets, and then how do you think about the core markets versus the new markets?
So one positive thing is that West, which has been a very weak market for us, actually even weaker than South, has started responding well for us. So I think that's one positive which we have from this financial year. Coming specifically to South that you are asking for, the story is a bit mixed. We have done well in 2 states, but we have not performed well in the other 3 states. So overall, it's been a mixed bag. But we are seeing in some areas where we have certain residual distribution reach and all, things have started picking up. We had one very big South dealer-focused product launch that was in Q1. This product is from a Hoskote plant, 4x2. That's been doing very well for us. We are seeing good volumes building up on GVT, which we are supplying from our Baroda plant to South India, or Dora plant to South India. So that's working well for us. So overall, it's been slow. It's been slower than what we had hoped for, but there is a decent response we are getting from the market, enough to kind of give us the confidence that we need to invest much more aggressively in South India. It's a very big market, and once we get that going, I think it would really put the wind behind, put wings to OBL top line.
Got it. Great. Thank you so much for the responses, sir. Appreciate it.
Thank you.
Thank you. The next question is from the line of Ashwath from Orient Capital Markets. Please go ahead.
Yeah, thank you for the follow-up. My question specifically on the dealer's inventory. So you did mention on there was some downsizing happening over the past few years. So currently, what has the trend been? Is the dealer adding up, upsizing his inventory on any end? What is the review from their end in terms of customer demand?
So Ashwath, the dealers, as I said, have been consistently kind of going slow on inventory build-ups and all, and even reducing their inventories. And I think that story seems to have, in my estimate, played out. And it is not going to be a very big consideration going forward. So I think we seem to be at an inventory level which the dealers are comfortable with. So I see that as a bit of a good sign for the industry as a whole. Especially for us, for the last 9 months, 1 year, sure, we have been very aggressively pushing our teams towards demand generation. So our sales team today carries a target for what is the total secondary sale orders that you have generated for the dealers and given to them, and we have a clear digitized process for capturing that on our apps and all. And that number has been steadily building up. And this is also one of the reasons that, we are optimistic about the future. That we are not kind of pushing stocks into the dealer go down. We are not trying to do primary deals for him to stock more. We are kind of going and talking to a dealer about, okay, this is what we are going to help you out with to sell out your stock, and on the basis of that doing a discussion on primary sales.
Okay. Noted. And on the OBTV, how many more stores do we foresee adding for FY27, till FY27?
So, Ashok, we have not done the FY27 AOP planning yet. I think this is something which we are just kick-starting, so I can't give you a figure. But as I said earlier, our first and primary priority is to kind of revamp our existing 300 plus OBTB, make them bigger wherever possible. Definitely change the branding and the display that we have, the whole planogram or display planogram in this. So that has been a bigger focus. Some new OBTBs will keep on coming up, but that will be priority number 2 for us.
Okay.
We have also, just for information, while we've not talked about it in the past, but especially in the South market, that question had come up. One of the reasons that we have found it a bit slow in South market is that we were not getting display area. It's a very competitive market. The existing display area of dealers are already promised and accounted for by competitors. So last 1 year we have started a project where we are doing not OBTVs but putting up displays in these dealers, displaying one cassette at a time, 10 leads, 15 leads, just to mark our presence. So that build-up is happening. So while the number of OBTX is very likely so at 300 plus, no major change at all. But the overall display in the dealer shop has been increasing because a lot of displays, a decent number of non-OBTV displays have also been put up.
Okay. Yeah, answers my question. Thank you so much.
Thank you. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Ashwant from Samadba. Please go ahead.
Yeah, hi. Thank you for the follow-up. I just wanted to understand, in the last 4 years, what has been the number of OBTVs which are closed down on a gross basis, number of closures?
You have that offline.
Hello?
Okay, so you are basically asking me for... I don't have that number readily, but my sense is we would have closed down maybe 20-25 OBTVs every year, and OBTX. So you don't have that figure separately. I think you can, we will pass it on to you. I think you can just work it out. But I'll give you don't hold me to it, but I'll give you a sense that we would have closed about 20 odd every year.
Okay, got it. And for each one that we open, what is the amount of money we put in from our end, and not what the franchisees contribute, but what we have to put in from our end? What is that amount?
So we have 3 or 4 different models, and it very much depends on the town and the size of the OVTX coming in and all. So we definitely, the branding is always ours. Getting the OBTV up on all social media handles and all, and managing that, and digitizing them with visualization tools and everything is all our expense. We some samples, sometimes we also give some deep discount on samples and all. So very, very, it depends quite a lot. I don't think our average figure is something which will make sense.
Okay. No, I'm just trying to understand what has been the cash drain on us because of this. The context is that's why I'm just trying to understand. Understood.
Okay.
Okay. And secondly, on the digital part that we have, because I think this has been at least something which has been always been talked about, the differentiation based on the digital approach that the company has had. So right now, what is the advantage that still remains with us versus the peers? Have they caught on, and what has been the impact that you would that you've been able to quantify? Okay, this has been the impact due to digital, which others could not get. Or I'm just trying to understand: is it like a real game changer, or is it a good to have?
So see, I think that's a question which is worth a PhD thesis by itself. But let me try to answer this. See, there are two or three parts of it. One part is pure simple efficiency and ease of doing business. Right. So how much it has added to your top line and your bottom line is anybody's guess. But the fact is that when I interview prospective sales employees and I ask them the simple question that what do you know about Orient Bell, and I'm talking about people who are from the tire industry, 9 out of 10 times I get to hear that when I ask them what do you know about OBL, they tell me that Orient Bell is a tech company. So the speed and the ease at which information is available to my dealers and my salespeople and all is light years ahead of what is the norm in our industry. So there is an ease of doing business. Anuj has spoken about our very healthy gross margins, which kind of go up to 36 to 38, 39% and all. I think that's also because we are so highly digitized that wastage is minimal. Any wastage kind of gets flagged off and gets collected. So this is one side of the story, which is ease of doing business, which is efficiencies and stuff like that. That's one piece. The other piece where digitalization has helped us is at the customer level, helping the customer to make a choice. Now we started our visualization tool in 2019. May 2019 is when we launched it. Today the tool has continuously improved. Today there's a voice-enabled tool, and we have 500 odd dealers who are using it. So all of this helps because these are things which your customer is not able to get from any of the competing brands. Today you walk into my OBTX, one of these 500 shops, which many of them are not even OBTX, and you can walk out with actually a design of your space, living room, bedroom, kitchen, whatever, on a WhatsApp instantaneously, which is something which is not available with, which helps you as a consumer to make a choice, and something not available with any of your competitors. So I think this is catching up. The world is digital. Our consumers are totally digital. Let's not forget that. It's not that the consumer is digital when he buys product A and is kind of old-fashioned 19th century consumer when he buys product B. So I think this will keep catching on. The trade is a bit of a laggard on adapting on this, but they also now slowly and surely catching up. So we see a big differentiator for us from this whole digital approach from the consumer acceptance and brand side also, not just the first part, which is efficiency and ease of doing business.
Got it. This is helpful actually. And my final question, so in terms of the closures of the OBTBs, so right now, so for this year, what are you projecting? Is it the same at the same run rate, or is it reducing, increasing? How do you see that in terms of OBTBs?
No, because see, we have not added so many new OBTBs and all. We have been much more careful and cautious in adding new OBTBs now, because longevity of the OBTB is now of prime concern to us. So I think as we get better on this, the need to axe older OBTBs should reduce. But as I said, these are all, this is something which we are yet to do our planning for FY27 in detail. And some of these questions will definitely come up for discussion at that time.
Got it. All right. Thank you so much. Appreciate it.
Thank you. The next question is from the line of Karan from Asian Market Securities. Please go ahead.
Hi. Am I audible?
Yes, sir, you're audible.
Yes, Karan, please go on.
Yes. Hi. So just wanted to understand the pricing environment in Morbi. When was the last price hike, and do we anticipate any pricing actions in the near future?
So, Karan, there is a lot of price action, but not in the price increase direction. It's in the other direction. And so I think Morbi pricing has been going down as always. I think that's really the norm. And for us also, the share, our own manufacturing ASPs have been maintained. But our Morbi ASPs have actually declined. Now, don't ask me how much. But they have declined because our purchase price from Morbi has also declined. So that benefit has kind of gone to the dealer.
Right. Sir, also wanted to understand, sir, our share of GVT over the last 5 years has increased from 13% to as high as 44% now. But the resultant impact on gross margin has been just 1.5% to 2%. So how do we see the GVT portion now increasing over the next 3 to 5 years and the benefit on the gross margins?
So, Karan, at 44%, I think we would be at par with the industry leaders, or very close to it. So this was clearly over the last 5 years back, 6 years back. This was clearly an area where we were not even playing. That more or less seems to have been corrected now. Now, within GVT, your question was that with increasing margin on GVT, why is it that our margins have not responded that well?
Right.
So let me try to answer that. See, within GVT now our focus, there is our part of GVT. The entry-level GVT product is now facing a lot of price competition. So we are moving into the higher end of GVT products, more surface finishes and all. All our new launches are aimed at that particular segment. Within GVT, higher grossing, higher ASP product. So that should help. And another reason is that, historically, for us, our manufacturing capacities, if you were to see, 5-6 years back, we hardly had any GVT manufacturing capacities in our own manufacturing, not the trading part. Now, that has increased dramatically over the last 5 years, all coming in mostly through internal cash accruals and all. But what has also happened is that our ceramics went down and we had, a lot of dependence, own manufacturing was dependent on ceramics. So as ceramic market went down, some of those products have gone out of the market, and so you see a bit of a netting of impact between lower-end ceramics and high-end GVT. That has resulted in revenues not growing as fast or margins not growing as fast.
Noted. And sir, one last question, if I may. I wanted to understand the slabs market in detail. How many players are there in the market? How is the competitive intensity, and how do we plan to get into the larger slabs, which is slightly better ASP and margin accretive? Yeah, that's it.
So, I think slabs market is there are about 28 odd manufacturers of slabs in Morbi I'm talking of. Outside Morbi, there are just, I would say, only 2 companies which have got plants outside of Morbi doing slabs. But we have 28 odd vendors in Morbi doing slabs. A few of them, I think 3-4 of them are under shutdown. We expect another 6 or 7 new plants to come in calendar year 26 on slabs. So you can safely say that we'll have about 25 to 30 manufacturers of slabs in Morbi, different sizes and all. The margins are not as great as what they were 1.5 years back. If anything, there has been significant erosion in the slab rates also. But having said that, I think that the slab market will improve. And within slabs, there is now a significant portion which is coming out in 15 mm thickness, which is a very good substitute for granite and basically natural stone. So I think the slab market will definitely pick up.
All right, and our plans to get into this market?
Not as a manufacturer. We are already in the market. We don't have plans to get into it as a manufacturer. The kind of capex it takes and the capacity utilization you need to make money, that equation doesn't look very attractive as of now.
Okay, thank you for the detailed justification. Thank you.
Thank you. Participants who wish to ask question may press star and 1 on their touchtone telephone. Thank you, ladies and gentlemen. That was the last question for today. I now hand over the conference to Mr. Aditya Gupta, sir, for closing comments. Thank you, and over to you, sir.
Thank you. Thanks for your patience. Thanks for being part of this call. And look forward to seeing you in May with our full year earnings call. Thanks a lot. Bye.
Thank you. On behalf of Orient Bell Limited, that concludes this conference. Thank you for joining us, and you may disconnect your line.